Well, hello everyone, and welcome to another virtual investor event hosted by NZX. My name is Doug Vrame, and I'm with the Capital Markets Origination Team at the New Zealand Exchange. So today we have three listed companies presenting. We've got Mercury, Pushpay, and Tower Insurance, and I'll introduce each of them in a bit more detail. But before that, just wanted to run over the format in case this is the first time you've participated in one of these events. We've got each company will present for 15 minutes, and then that's followed by 5 minutes of Q&A. We encourage you to ask questions. The way you do that is with the chat function in the webinar box, and we will get those questions right to the presenters, and hopefully they can get answers back to you. If we have too many questions to go over time, keep asking them, because we'll send out an email afterwards with the answers for you. Other than that, we will have a link to this recording afterwards as well that we'll send out, and you can recap it there. So we can go ahead and get started with our first presenter, our first group. We've got the Mercury is here today, and we appreciate you guys taking the time to join us. Vince Hawksworth is the CEO, and William Meek is the CFO. Vince joined Mercury in 2020 and has considerable experience in the energy sector, both in New Zealand and Australia. Most recently, he was the CEO at Trustpower, and before that, of Hydro Tasmania. Vince led the demerger of Tilt Renewables from Trustpower, and later oversaw the acquisition of Tilt's New Zealand assets by Mercury. William Meek joined Mercury in 1999 and has the finance, treasury, legal, and IR function at the company. He's been responsible for generation, investment strategy, and enterprise risk functions, and has long-standing industry experience in risk management, power development, wholesale markets, and forecasting. So guys, thank you very much for taking the time to join us today, and I will turn it over to you and then jump back in with questions.
Thanks a lot, and kia ora everybody. Great to be able to present to this forum, and so William and I will share the duties, go through that slide pretty quickly, and talk about who is Mercury, what do we look like. So we're 100% renewable generator. We're vertically integrated, which means we have both generation and retail. We're the second largest of the players, and that's in description of a gentailer, so people who've got both generation and retail. We're now New Zealand's largest wind generator, following the acquisition of the Tilt Renewables New Zealand assets, and we're also the largest electricity retailer by customer market share after the Trustpower retail acquisition. The sort of charts and pictures on the right-hand side of this slide give some indication of where our assets are. So lots of central North Island assets, and that's blown out on the right-hand side, showing the Waikato River, which obviously is important. We produce a lot of energy from hydro. Our geothermal assets, which use the natural resources of geothermal steam, and our wind assets. On top of that, we do have a significant pipeline of new opportunities, largely in the wind space. So we're, I guess, both a yield and a growth company. Excuse me. This is how we kind of think about our strategic framework when we're thinking about the things that we need to do. Because of the recent transactions we've made, we're currently reviewing our long-term purpose, which is clearly driven by our growth aspirations and New Zealand's need to decarbonise to 2050. Makes us very relevant. Electrification is incredibly relevant in that space, and that's giving us cause to rethink our purpose, and also our long-term goals as we bring together what is New Zealand's largest retail business, but also includes a good pipeline of new asset development, particularly in the wind space. Our 3-year objectives revolve around two overarching issues. One is how we thrive today and deliver on our promises, and the other is how we actually shape tomorrow and be match fit for the future. I particularly we are focused on growing shareholder value, and we think a lot about the desire to grow EBITDA in a way that is value accretive. So we've recently, again, and you'll see crossed out in the top center of that middle circle there, the 700's been replaced by 800 because, you know, the acquisitions that we've made and the investments we've made have already taken us past that expectation of targeting. So that's really important. We are right at the middle of decarbonisation, as I say. So you can see down at the bottom there, playing a leading role in that process is, we think, really important for us to stand up and do. And if we're going to achieve that, we need options to execute, and that's about our development pipeline. But we also need to be resilient to all of the issues that go around being a company that bears an important responsibility for New Zealand having not just renewable energy, but reliable and cost-effective investment in that sector. We inevitably need to embrace technologies and build capability from a people perspective. And as a result of the Trustpower retail acquisition, we've just increased our staff numbers by between 70–75%, and that brings a big challenge and opportunity about cultural alignment and how we operate. So this sort of slide really sums up the transformation that's occurred in the business, and particularly come to fruition in the last financial year, and creates the platform for us as we look forward to the opportunities in front of us. And, you know, I guess there's a lot of work went into this positioning. Top left-hand corner talks to the Tilt New Zealand acquisition, which was enabled by the company's earlier decision to buy 20% of Tilt Renewables. Was a acquisition that did raise some questions for some investors, but it gave us the opportunity when Tilt was sold to participate in that process and have a role to play. And out of that, we acquired at good value from our perspective the New Zealand operations of Tilt, and importantly the future pipeline of new opportunities. So that, as it shows there, added immediately 5 wind farms and approaching 1,000 gigawatt hours of generation. On the right-hand side at the top there, you see the Trustpower retail acquisition. Look, ultimately, we do believe scale matters. You know, that was a competitive process, and there are those that sort of said that I was putting the band back together with the Tilt and Trustpower thing, but in reality, it made a lot of sense to Mercury to gain the Trustpower retail business and its multi-product bundling capability. We're now in the process of integrating, and so what does all this mean? It means whether if you're on the Trustpower brand or the Mercury brand, you're all part of the same business now, and there are lots of integration opportunities and scale opportunities. And lastly, before I hand over to William, you know, Mercury has been building what will be New Zealand's biggest wind farm in the Tararuas, and that we are reaching the end of that. The north part of the wind farm is now constructed, and the south part should be finished in the middle of next year. So I'm going to hand over to William now to talk a little bit more about some of the things that we've been doing and give a feel of the business operation.
Thanks, folks, and kia ora to all the investors on the line today. So I'll just take us through sort of some financials for the firm. So we're certainly very pleased with our performance in FY22. Certainly EBITDAF at $581 million for the year, bolstered significantly by those acquisitions in wind from the ex-Tilt assets, 5 wind farms across New Zealand. and also the commissioning of the northern section of the Turitea wind farm. So materially lifting Mercury's wind generation and supporting that significant uplift in earnings and powering us through into FY23. We can see below that we do give guidance for both earnings and dividends. So that's forecast to lift on a normalised basis to 756 million again. So we'll have two strong lifts in earnings on the back of those acquisitions and improvement in core performance. We did have a dry year. It's certainly turned wet since June, so we've had 3 wet months in a row. We're down here in our Hamilton office right next to the mighty Waikato River. She's pretty high at the moment. And Lake Taupo, the feed lake for the river, also very high. So we're certainly generating a lot with power prices actually falling quite low. I mean, at times they're $0, which is certainly interesting in terms of that effect of renewables crowding out thermal generation, which given fuel prices and the ETS relatively expensive. So we're about 400 gigawatt hours lower last year in terms of what we'd normally generate across our hydro catchment. Vince and I and the exec team here very thrilled around our Thrive program. So 18 months ago, we kicked off a process to look to continue to improve the way we do work and work together at Mercury. We set ourselves a target of delivering a $30 million benefit by the end of FY22, and we're very pleased to report that we actually came in at 47 mil. So, significant changes in terms of the way we're doing maintenance, some of our procurement practices, some really good gains in terms of how we've been trading carbon through the market with the quarterly government auctions there in the ETS, and the way we're operating a number of our plants across the river. So some really good efficiency gains happening there from our team. For those on the calls, dividend guidance will be interesting. So last year we increased dividends 18%. So we've got a final dividend payment due on the 30th September. So that's 12 cents per share. We've also given guidance for FY23 at another 9% up to 21.8 cents per share. Our dividend reinvestment plan will be active for this final dividend. So if you're interested in that, please go to Computershare or fill in the paperwork to take advantage of that. Balance sheet's really important. Renewable generation is it's not cheap. And certainly with global pressures on supply chains and shipping, commodity prices and capacity constraints out of OEMs, we're certainly seeing pricing for equipment rising quite strongly. So by having a balance sheet to assist with further generation development growth and support New Zealand's decarbonisation is a huge focus still for the firm. I like these slides as CFO because they give trends, and trends tell you a lot about what a company is doing. So I'm not going to labour too many of these. We've talked to earnings and the strong growth through 22 and then onwards into our 23 forecasts. Our OPEX has been controlled. You see an uptick in 22 largely as a change of the increased scope of the business, so the introduction of the Trustpower retail business and wind assets to our portfolio largely explain most of the cost changes. Last year was the 15th year of ordinary dividend growth. So again, for an NZX firm, that's relatively unusual to be steadily increasing dividends over that length of time. So it's a record we're pretty proud of. You can see our generation versus our sales book, as Vince said, we're an integrated player. So virtually most of what we generate is ultimately sold to end users, from yourselves at home right through to large industrials. 22, the capex you can see spiking massively, again reflecting those acquisitions of the wind farms from Tilt Renewables at around 700, mostly paid by sale of shares, with over 600, and then the Trustpower business at $470 million. So a big spike in growth capex, and we're forecasting some further growth next year to complete Turitea and potentially some other renewable projects. And a consequence of that with gearing, so debt reaching $1.9 billion for the firm, while interest costs still remaining low, but an expectation those will rise. So I'll leave you with Vince for some concluding comments.
Thanks, William, and thanks everyone for your attention. So hopefully that's given you a really quick run through the Mercury business, the opportunities we have in the future, and the resilience of our core business. So I'll hand it over for questions.
Well, thank you guys. Appreciate that. And we do have a few questions that have come in. You mentioned decarbonization, and that's kind of a big topic, certainly for listed companies with ESG. What are the, I guess, the profit implications around that in the short and long term for Mercury?
Well, I'll kick off with a pretty short answer. I think there is, but for Mercury, because we're in renewable energy and because much of this decarbonisation will be driven by electrification, it gives us some great opportunities to deploy more capital against new wind farms. So I think from that perspective, there are positive opportunities. Of course, the risks to those opportunities come if, as a sector and as an organisation, we don't ensure that we're reliable from a point of view of delivering energy, and renewables are more intermittent, so there's an important piece of work there. And also we ensure that we ensure that customers are getting energy that is as affordable as possible.
And then if you look at, I guess, the types of renewable sources out there, hydro, geothermal, and wind, you talk about more opportunities. Is there any one of those three in particular that you'll be focusing on that have present better opportunities?
Yeah, so look, hydro is pretty limited. So in hydro, we're looking, as we upgrade our machinery, to look for more efficiency and slight lift in megawatts. So that's happening all up and down the river as we do our capital refurbishments. In geothermal, we do have some opportunity to expand some of our plants, and we're looking at that pretty seriously. But our big portfolio opportunity is in wind, where we have a significant number of projects we could bring forward, and we're working through all of the processes of resource consents and landowner relationships and capital costs.
Awesome. Well, thank you guys. There are a few more questions. We'll get them to you via email and send them out, but really appreciate you guys taking the time and running over everything with us. So thanks for joining us.
Yes, thank you.
So now we will move on to the next company. We have Pushpay joining us, and we've got Molly Matthews from Redmond, calling in from Redmond, Washington. Molly's the CEO of Pushpay, and prior to becoming CEO, she served as the Chief Customer Officer, where she led the award-winning customer service team at Pushpay. Molly has Pushpay's customers at the center of every decision she makes at Pushpay, and her passion for people has led her to focus on creating a very smooth customer experience. And the strategic thinking she brings along those areas will continue to lead Pushpay customers and employees to success in the coming years. So Molly, thanks for joining us, and I will turn it over to you.
Wonderful. Thank you for having me. I think we'll just get slides going here. Perfect. All right. Well, just to hop in, I wanted to give everyone a little introduction to Pushpay. So Pushpay is a fantastic company that was started in Auckland, New Zealand by two wonderful Kiwi gentlemen in 2011. And that really started the company out of a desire to make giving to their local church as easy as it was to purchase a song on iTunes. And now we all think of how simple it is to buy nearly anything from a mobile device. But again, 10 plus years ago, that was something that was a little bit challenging. And so they really wanted to create a new space for churches and non-for-profits to be able to extend generosity regardless of someone's age, income, or their ability to carry cash or check. And so that really was the beginning, the foundation of Pushpay. We have since expanded to have many different products that are available to our customers. We are proudly listed in New Zealand and Australia, but the majority of our customers are churches here in the United States that span from 50 in size all the way up to 40,000 people who interact with their services throughout a given week. This is a great representation of the different products that are available through the Pushpay platform. We have had the great opportunity to acquire 3 different companies over the last few years that have really expanded the product suite for Pushpay customers. The first was the addition of a custom application in 2016. The second was the acquisition of Church Community Builder, which gave us access to CHMS features, which that's child check-in, events, schedules, small groups, every different avenue that a church would want to engage with people really is thoughtfully curated inside of that CHMS. The last was Resi Media. So Resi Media was acquired in August of 2021. So we're just coming up here. Actually, this last Saturday was the 1-year anniversary of them joining our family of brands. And Resi Media really brought us access to live streaming software and hardware, as well as the ability to live stream to multi-sites, individual computers, mobile devices, as well as to store content in a content library. So it's really an amazing feature for churches to be able to partner with one company and have access to all of those different features that you can see on the slide in front of you. One of the things that is absolutely core to Pushpay is the ability for us to help our customers to create community connection and belonging. And you'll see that that is absolutely our purpose, to bring people together by strengthening community connection and belonging. And those different pieces of the wheel that you saw just before really are what give us the ability to do that. Our mission is to be the preferred provider of mission critical software to the faith sector here in the US. We do have plans, which I'll share with you in just a moment, to expand outside of the United States, as well as to serve churches, non-for-profits, and schools in the future. This is a great representation of the different ways that we package our products. So the slide a few minutes ago was about the different features that we offer to our customers. These are the different packages that a customer could purchase. So we do offer these independently: donor management, which was our flagship product, church management, video streaming, and then our church application. When we bundle those items together, that is called Church Stack. So someone can purchase the bundle, which includes access to them, as well as wonderful API-driven integrations between the platforms. For our Catholic customers and prospects, we have Parish Stack. So Parish Stack is our Catholic-focused offering. This is the newest product suite that we've launched to market. It was launched just this past January. It represents a fantastic opportunity for us to continue to gain ground with large and medium-sized parishes here in the US. We've been working really hard over the last year to also localize our software in order to be able to serve our Spanish-speaking customers and prospects more holistically. We also just launched today, actually, the ability to leverage Vietnamese inside of our application. And that's really, again, expanding our opportunity not only to serve churches here in the United States with multilingual community members and employees, but also for us to expand internationally when that time is right. One of the things that's really unique about the Catholic Church in the United States is that it actually is made up of primarily large-sized parishes, where the Protestant space is made up of mainly small churches. So one of the reasons that it was a massive catalyst for us to go into the Catholic space and to build a product specifically for the Catholic space was really to maximize our product suite in those larger organizations. That's the right or ideal customer profile for us. And so that was a great opportunity for us to expand our total addressable market for medium and large parishes and churches in the United States. This is a great visualization of the total addressable market This is just specific to the US market opportunity. You can see on the left-hand side, this is donor and church management. So thinking about software and processing volumes. And on the right-hand side is the total processing volumes that's available here in the United States. Another great opportunity to see the impact that the Catholic segment has on our total addressable market, both from a software and processing as well as from a pure processing volume. So again, left-hand side software, right-hand side processing volume. We today very proudly, and I'll talk about some of our highlight stats, have processed $7.6 billion in this past financial year, which ended in March of this year. And 7.6 obviously is just a small piece of the $131 billion that's available here in the US. So next I'm gonna hop into a little bit of information about our strategy. So how we continue to grow within our customer base, outside of our customer base, and have a unique opportunity in the existing customers we have to expand processing volume, as well as to encourage additional products purchased and leveraged. And then we'll also dive into where Pushpay is headed next. So when it comes to how we provide great service and keep the customers that we have today, it really comes down to these 5 areas. So we are a complete product suite, which is unique in our vertical. Oftentimes there are disparate tools that a church, non-for-profit, or education organization will have to purchase in order to be able to serve their community needs. We have worked hard over the last 3 years to bring those all under one roof and use the fantastic API integrations we have available to us to make sure that the data is flowing within our ecosystem. We also have the top tier proven strategy for encouraging additional donation behavior out of our church communities. So we have proven across the 10 years that we've been serving churches here in the United States, Australia, New Zealand, and Canada, that with our product, donation volumes grow in time. And this is by giving easier access to community members of all ages to be generous to their community. We are designed to drive engagement and growth at our core. We want people to participate more frequently. We want them to have access to community members, and we want them to feel like they have an opportunity to truly and deeply connect and engage with their church community. We have always had a hyper-focused team on UI and UX. One of the differentiators for us in the early days was really thinking about the end user, the community member, the donor, the student, the parent, before we thought about the team that was working behind the scenes to process those donations. And that has been a fantastic move for our company. It has given us great brand notoriety, and those community organizations who desire to grow and give excellent experiences to their community members have chosen Pushpay time and time again over the years. Best-in-class customer service is another piece of the Pushpay way. So we believe in live implementation of our product, making sure that there's human connection whenever possible, and having 24/7 support, both from our engineering teams as well as our customer-facing teams. When we think about accelerating growth at Pushpay, we think about that as a near-term, middle-term, and long-term strategy. So in the near term, as we spoke about, continuing to expand in medium and large churches, both Protestant and Catholic, through Church Stack and Parish Stack. We also believe that that Resi Media product will continuously grow on its own, and through integration will help us to sell more products to new customers. Product bundling, which we talked about, and then also continued investment into our business to think through, strategize, and create the right game plan for our medium and long-term growth. So medium term is really about Catholic market expansion. There is a tremendous amount of opportunity. There are 17,000 parishes just here in the United States, all of whom are going under what's called digital transformation. So from the Vatican all the way through to the different archdioceses here in the United States, there is an initiative that is being passed through called digital transformation, where those communities are being asked to meet their people where they are at. And we all know that where most people are at is on a mobile device or a laptop. The other piece that is still a huge opportunity for us is middle market church growth, Protestant primarily. So for us, a middle market customer is a church who sees anywhere from 200 up to 1,000 community members on any given week. So that is a large number of churches here in the United States and a huge focus for us in the medium term. Longer term, we would love to expand internationally. We would love to better serve our education partners and grow in that segment. Today, we serve basically parish adjacent or church adjacent education. So think about a parish aligned school or preschool. We really would love to continue to build out more enhanced product feature set for that community as well as non-for-profits. So performance, these were some of the brag slides that I had leaned to, and unfortunately our CFO isn't joining today, so I'm going to take some of the financial pieces of this. We have grown the number of products utilized on our platform up to 19,039, so that's a 40% year-over-year growth from this past fiscal year. One of the other numbers that I just want to kind of highlight, because I think this is really showing the impact of our product, is that 36.9 million different transactions were processed through our platform last year. And the other thing that I just love to see is that came from 2.9 million unique donors. So donors who are choosing to be generous to their community, who are giving sometimes one, sometimes multiple gifts into the church community in order to see great things happen. The other piece that is a highlight for us is that we processed $7.6 billion this past year. That's a 10% year-on-year growth from the year prior. And the lifetime value for us is $5.8 billion, again, up 9% from the past period. One of the things that is a key performance driver for us is processing volume, which we spoke to. So this is just a different way to take a view of that. In FY20, we were at $5 billion processed through the platform. I actually remember when I started with Pushpay, we celebrated $1 billion processed through the platform. So pretty incredible growth across 5 years, and now are seeing a 10% year-over-year growth there. The other piece that was a huge milestone for our company is we passed the $200 million of revenue in this past fiscal year, something that we had been talking about, had our eye on for goodness 6 or 7 years as a big goal. So that was a huge milestone for us to celebrate internally. And then total customers. So we know that we need to be hyper-focused on growing customers and the number of products that are utilized by those customers. Customers who utilize more than one product stay with us longer, and customers who are utilizing more than one product are actually processing more dollars through our platform on average. So that's something that's important to us, and we know that we want to continue to grow in that large and medium segment. All right, so future growth, we had talked about just a little bit, but I did want to highlight growing the number of customers within those medium and large segments. I know I've said that many times. That is a core focus of ours in this upcoming year, 2 and 3 years. The integration of Resi Media, both into our suite of solutions, but into our business. Again, we're 1 year into that. We have folded in much of the business integration side of that, but we are still working through some really fantastic business integration and some really amazing product integration. So when you think about watching a live stream, so this could be a concert, you know, a non-for-profit concert that you're watching, it could be a service, a church service that you're watching, having the ability to donate in that screen live is really a big focus for us in this upcoming year, is making sure that you have both a call to action, but also the ability to donate. And then we can track that information behind the scenes about engagement to be able to really help our churches guide and follow up with and contact those people who are choosing to engage digitally with church. We are very, very proud and happy to be serving many Catholic churches today, but we've just really started that initiative. We had put out into the New Zealand press that we just landed the Archdiocese of Seattle, which is just across the lake from our office, which represents over 120 parishes just in the Northwest region. That is a fantastic win for us and really has given us a lot of of tailwind pressing into that Catholic market, which is fantastic. And we also really have a desire to research and expand into international markets. So adding that Spanish language piece and Vietnamese is just really the tip of the iceberg for our plans to localize our software and expand into new and exciting international markets. The other piece for us that we are looking to expand is processing volume. So the processing side of our business is extremely profitable, and we desire to continue to grow that into the future. We have a $10 billion per year growth goal. That is by the end of March 2025. And so that is something that we are working on both from a product and a service standpoint to ensure that we're bringing on new customers as well as growing feature adoption and processed dollars through our platform from our existing customers. So I think with that, I will invite Doug back and take some questions.
Cool, thanks, Molly. Definitely have some questions coming in, and a couple of them are around competition and competitors, and who's out there, and how do you view and plan for, I guess, not church-focused apps like Venmo and other payment processors that might be trying to get into this space, and how does the whole kind of landscape look there?
Yeah, you know, it's always interesting, and we take it as a compliment when people try to lean in and copy what you've built. But the competitive landscape for us, it really started to pick up probably 4 or 5 years ago. And we're still seeing the same players today in the church space that we have for the last 4 or 5 years. So nothing too dynamic or new. We're actually probably the new player in the Catholic space versus seeing another new player come into the Protestant space. We do see applications like Venmo, PayPal, and others that are kind of adjacently involved, but often they really aren't tailoring their services to the needs of a non-profit organization. So there are many things behind the scenes that we do to ensure that it's very easy to use to document. In the US, we actually have a tax credit for donations given. And so behind the scenes, we even will send those statements out to donors to take that burden off of churches so that they have a way to gain that tax credit when that time comes.
Thank you. You mentioned growth potential outside the US, and a couple questions on that. Would you do that through acquisitions, or would that be organic kind of product development and customer acquisition? And then in terms of would that lead to other or applications and services for other religious faiths? And what are kind of some of the big projects you have going on there?
Yeah, so when we think about international expansion, probably the most natural or organic opportunity for us is in Spanish-speaking countries, and specifically the Catholic Church in Spanish-speaking countries, because of how the hierarchy of the Catholic Church works. It's just a little bit easier to penetrate in that area than it is kind of one at a time Protestant churches that are in those Spanish-speaking countries. There are other areas that are that have a high number of Protestant donors that we look at. So we think about Brazil, we think about Southeast Asia, we think about even Europe to some degree. So for us, you know, we think that we organically have a product that can fit there. What would be helpful for us through M&A is just a small number of customers to sort of get us started. We already have relationships when it comes to the payments processing side, and then also we've just about fully completed the localization of all of our products already into Spanish and into Vietnamese.
Well, thank you, Molly. That was a great presentation. Really appreciate you taking time to walk everyone through that and tell us more about Pushpay. So there are a couple more questions we'll get to you and send those out. But thanks again.
Great, thank you.
So now we'll move to our final presenter, and we have Tower Insurance with us, and hopefully Blair is still on the line, but there he is. So Blair Turnbull is the CEO of Tower, and let me just minimize my thing here so I can see. Blair has over 20 years experience in financial services, largely focused on insurance in New Zealand, Asia Pacific, and the UK. Most recently, Blair was managing director with Aviva Group, and before that was executive general manager of wealth and insurance at ASB Bank. So it brings a ton of international experience to Tower's business and has a proven track record of success. So Blair, thank you for your patience, and take it from here.
Morena, thank you, Doug. Just double check on the tech. Can you see my screen there?
All good? Yep, looks good.
Fantastic. Okay. All right. Well, look, thank you very much for the opportunity to talk to you about Tower. Maybe if I just have a real recap about the New Zealand insurance market more generally, and then we'll talk a little bit more about Tower. But it might surprise some people to know that the New Zealand insurance market is about 7 billion premium. It's a large market, of which about half has been in personal lines and the other half is in commercial. And that's been growing pretty significantly. Why? Because we all love our homes, and it might also surprise some people to know that of homes in New Zealand, 96% of them do have insurance, and when it comes to areas like motor, about 93% of all cars also insured. And in terms of comparison to other markets in the world, that is right up there with the highest of any OECD country. We love our homes. We know that we do get a lot of natural perils. Unfortunately, we get the whole smorgasbord. We get earthquakes, we get storms, weather storms, and as a result, we do appreciate insurance. And that means that this market as a whole is pretty attractive. So maybe now just turning a little bit to Tower. Can I just double check you've got that first image?
Correct. Yep. We can see that intro page slide.
Okay, I'm glad you can. I'm just seeing myself. That's okay. So look, when it comes to Tower itself, we're 154 years young. We're the last listed insurer here. We operate both in New Zealand and also the Pacific, which makes us quite unique in that regard. We're in 7 countries in the Pacific as well as New Zealand. We have around about 315,000 customers there or thereabouts. And what's quite unique about Tower is that we're a direct player. So a lot of insurance in terms of how it goes to market is traditionally through brokers and also banks. But what makes Tower different is that we are Kiwi, and we're also predominantly 90% plus direct to consumer. And we enable that sort of distribution footprint through technology, and I'll talk about that more. And from a technology point of view, it both helps us enable us to grow quite strongly. It also creates a lot of efficiencies for us as we go forward. In total, we have around about 426 million in premium, and we have a very robust sort of financial side of our business now. In particular, we have around 860 million of catastrophe cover, so that covers us for large events. That's effectively insurance for insurers, and we're very, very well capitalized. And I'll touch on that as we go through the presentation. So at the heart of where Tower is, let's just take a minute to just recognize what that experience looks like. At the heart of everything we're doing is looking to create a really simple and rewarding customer experience. And why is that so important? It's important because whilst everyone in New Zealand really sees the value of insurance, that's 9 out of 10 homes are insured, similar with cars, unfortunately, research tells us that 2/3 of individual customers really don't understand their insurance. They find it complex. There's lots of jargon. It's typically with a number of providers, often paper-based. And so the overall experience is a challenging one. And insurance make it our mission to really make it beautifully easy and simple. And we're doing that again through really good people, answering the phone well, but increasingly we're doing it through a digital platform and with partners. And you can see just on the slide here, how have we done that? Yes, we do a lot over mobile devices, etc. on the phone, but we've also enriched the product set. So 2 years ago, we looked to expand it. We introduced boat insurance. We're the first boat online insurer in New Zealand. We've then added on pet and travel in conjunction with Allianz, the world's biggest insurer. And just more recently, as recently as 2 weeks ago, we introduced construction cover for all those people around the country looking to renovate. So our vision is very clear. We understand that people do want insurance. They know they need insurance, but they do struggle to understand it. And our approach is to be very fair and transparent and simple around how we present insurance through an enriched product suite, and one that's increasingly digitally enabled, and one that's very, very easy to use, and through our sales directly and with our partners. So just moving on to the next slide. So through that customer experience, that's enabling us to grow strongly. Our CAGR over the last 3 years is around about 13%, which is double the market system growth of around 6 to 7%. And again, through digital, you can see almost 2/3 of all of our new business is now digitally enabled. All of our customers are increasingly building out those relationships. Over half of our customers have more than one risk with us. So for example, their home and their car, hopefully in the future the boat as well, or the pet that greets them at the front door. We're doing it increasingly at a lower cost to acquire because we are leveraging the digital side of it and leveraging our existing customer base. So the cost to acquire is now 11%, down from 12% previously. And that compares to a traditional model which has commission layers maybe of 20% or more for a home product. So you can see the efficiency that is achieved by being direct and also through digital. And all of that rolls up, most importantly, to how the customers are feeling. And Net Promoter Score is about 40%. That's up considerably on where we were at the same time sort of last year. And we've shown a really strong trend line of improvement that's enabled us to be General Insurer of the Year. So despite being 154 years young, it's the first time we ever won that, which was really, really pleasing, and a reinforcement that the experience is becoming one that's, differentiate us from the competitors. Tower registrations, those are the folks that where you can go online, you can see all your policies, you can adjust them as you need to fit your lifestyle. You can see a really strong growth since we launched the digital platform around this time 2 years ago. You can see a really strong growth in those registrations, and that's how we're increasingly engaging with our customers. The digital platform, just clicking through a slide, is also enabling us to increase enhanced efficiencies. And through this slide, you can see that over half of all of our transactions are now digitally enabled. That includes both new business and servicing, as well as claims. So you can see there that 48% of all the claims are now lodged online, which is really pleasing. That's enabling us to actually bring down the overall cost of the business. The management expense ratio, or MER, is down to 35.8%. And you can see that's a clear trend of coming down from the low 40s to 35s, where we've been over the last 3 years, which is really, really pleasing. So it's enabling us through the technology platform. It's enabling us to scale and grow and engage with customers better, but also realize efficiencies right across the Tower Group. Just going down to the next slide. In terms of just maybe briefly touch on some of the challenges that we're facing. I know a lot of businesses say the same thing here around inflation. I'll also talk to large events in a second. But first of all, inflation and supply chain, and we certainly have not been immune to this. We called it early when we saw inflation coming through about April last year, and we were very decisive and quick to respond. And how we did that was with targeted improvements in our pricing. And you can see there, the bottom left, over the past year, we've made 70 adjustments to our pricing, our risk-based pricing, which I'll touch on a little bit more. We've also started to really look for efficiencies and looked at ways to optimize our supply chain. 76% of all of our claims go through our preferred network, which gives us synergies and helps us to absorb some of the inflation that has been in the system. What's also really important from a pricing point of view is what you priced, for example, home insurance is matched with the technical price of what we manage that and reinsure it. And we achieve that through things like the Cordell calculator, which helps us to assess the sum insured of a home. And the 99.8%, pretty much close to 100, is basically saying all of our home insurance customers that are coming through are renewing using consumer price index adjustment or the Cordell calculator to make sure that we do get accuracy in our sum insured for homes, which is really important. So we are understanding exactly what we're putting through in premium is matched to the technical price of the risk we're taking on. Really, really important, because you could understand when that gets as a mismatch, you end up having a difference between what's sum insured with the customer and what it's costing to rebuild that home for the customer, and you want it matched up. And that's a key part of it. You're also, I touched on risk-based pricing. That's something that Tower has led out on. 2 years ago, 3 years ago, we did risk-based pricing for earthquake, and we introduced about a year ago risk-based pricing for flood. And what we really believe in that as a principle is that customers should only pay for the risks that apply to them. So, and that's really important, because if you're sitting here in Auckland, which is a lower risk area predominantly for earthquake, you don't necessarily want to be paying as high as an area that is high risk for earthquake. And we think that's the right way to position the risk-based pricing. Is fair for all customers. It's very transparent. You can see on that screen, every single residential home in New Zealand, we produce a risk profile for. And it's on a scale of low, medium, high, or very high. And we share that with customers for both earthquake and for flood. And this time next year, we hope to expand that to cover coastal erosion. Because what we really want to do is, break down that wicked customer problem of not understanding your insurance. And we're sharing all of our data with our customers to help them easily understand the risk profile of their homes, and therefore take away the surprises, but also work with them to help mitigate those risks. And that's good for the customer. We believe it's good for Tower, and longer term, it's good as we manage some of these climate changes that we're seeing coming through. Maybe if we go to the next slide, we can just talk about that briefly. I know we've seen a lot over the last week, the tragic events around the rainfall around Nelson and the slips that have occurred in that. A record rainfall for Nelson, 75 centimetres. But also, some people may not have picked up, but on the Saturday in the Northland area, Waitara and the like, they had the hottest ever day in August. And I guess the point here is that climate change is real. It is impacting us, specifically in New Zealand and the Pacific. We see this more than many other countries. And what we feel is a real mission for Tower is to help work with customers, to help work with councils and the government to really understand the climate change impact more, and also to adapt your insurance to support our customers as those changes come through. And what you're seeing on this page is you're seeing the frequency and the severity of those large events increase. And again, at the end of the day, we're an insurer. We are, I know it's hard for a lot of the time, those events as they come through, but we're comfortable with it. That's our business. But what we do see is really, really critical is pricing it right through risk-based pricing, making it fair and transparent through customers, sharing that data with customers, that rich and data that we do have, ensuring that we have the right reinsurance. So should a large event happen, like the Tonga volcanic eruption last year and subsequent tsunami, that we have the catastrophe cover in place to ensure that those claims are paid in a timely manner. We're also working with communities, as mentioned, to really help them better understand the climate change and also better manage it going forward with things like parametric cover. We've introduced EV cover in the last 18 months. We have sustainability benefits that are included in our insurance cover. So always looking to work with customers and communities to recognise those climate change, but also to have mitigants against them. So how has that all played out in terms of earnings? Pleased to say that Tower is in good shape. The result that we had at the half year in March this year of 18.9 million for underlying NPAT was arguably our best result in the last decade. And it's a continuing trend of performance in that we're managing the margin well, and that's enabled through the technology side. A good indicator of that is our core. A core is the loss ratio, which is around 48% for Tower, which is very, very competitive and reflects our insurance fundamentals, combined with our MER. Together, that makes up to 94.8%. And having worked in this industry for 20+ years, that is a very competitive core, and it's something that we're very pleased with, and we monitor very, very closely. And ultimately, that flows through to where we are as a business. Tower is in a strong capital position, a strong solvency position, and that was reflected earlier this year. We returned capital return of 30.4 million. Our parent solvency at 200% is very strong, good rating. And earlier this year, we announced half-year divvy of 2.5 cents, and our full-year guidance remains on track at 21 million to 25 million. And a dividend of around 5.5 cents. So we're very pleased. We're very mindful of laying down a very consistent track record for investors. Maybe finally, just a quick comment about looking ahead. We expect the strong customer and premium growth that we've demonstrated over the last 2 to 3 years to continue. It's underpinned by a strong business around the insurance fundamentals, how we price, how we manage risk, how we reinsure that. Also enabled through that investment in technology and digital and data. We invested over 125 million over the last 3 years in the technology platform. We're starting to realise the benefits around the customer experience, revenue growth and efficiencies, and we expect that to continue as we look forward. And that includes as we manage things like claims inflation and climate change, which we're very aware of, but we believe we're well positioned to weather those challenges and also continue to grow the business very positively. So maybe I'll pause there and happy to take any questions.
All right, thanks, Blair. Great information there. We do have a bunch of questions coming in, so we'll try and get to a few of them. Talk about the biggest areas of growth for Tower, and how that relates to kind of some of the climate threats you talked about, the coastal erosion, heat, rain, all these things. Are any of those that are a risk for us, the big growth areas that you guys see for the business?
Yeah, look, again, right at the beginning is we're a country of Kiwis and the Pacifica as well. We know the importance of insurance. We all know it. You have a beautiful home, you wouldn't not insure it. So, insurance is top of mind. The key thing here is understanding that insurance, making it really simple and easy. And we do see the nature of, as we understand those perils, people will adapt their insurance accordingly. And the good thing is that as Tower, because it is enabled through digital data technology, we can adapt quickly. And that's what we've shown and demonstrated over the last 2 to 3 years. What we also see is an opportunity to do that in the small business end of the market as well. That is a big chunk of that $7 billion of premium. And we do see an opportunity to positively disrupt that, like we've done on the personal line side. So that's something that we're certainly going to pay more attention to in the coming years and look for growth from.
Thank you. Does the simplicity you talked about and making it easy to understand insurance versus the kind of the broker model, is it cheaper for customers with Tower because you're going direct to consumer instead of going through a network of brokers and different layers? And is that an advantage you guys that's unique to you guys?
Yeah, look, we're the biggest direct player in the country, and obviously the market is dominated by the 2 Aussie insurers, which are traditional insurers. So we do think that's a differentiation for us. We think we can competitively price it. We also do the risk-based pricing, which is all about saying to you, we see you, Doug, and we see your home and your motor car, etc., and we'll do pricing for you based on a really, insular, a real focused level of data that we have about you and your home, and therefore you only pay for the risks that apply to you. So that's quite differentiated as well. When you bring that together, a really nice, simple, easy experience. You can pick up your phone and talk to us, or just see your policies at any time, combined with really targeted pricing. We believe that's a really nice combination that, is a successful combination and differentiated in this market.
Yep. So last question is about some of that, I guess, technology behind or the science behind the decisions in modeling and pricing, and how that's kind of evolved. This is a question about new emerging sciences with actuaries. What are Tower's stance on this sort of modeling in the New Zealand market? Is this an emerging thing where you might look to acquire companies that are developing this new technology in terms of how the science behind pricing works?
Yeah, look, we are big investors in the technology, in the data, but also really happy to partner. We partner with Auckland University Data Science faculty. We partner with the University of Waikato, who are doing the Bachelor of Climate Change. We partner with RMS, which is the biggest global player in risk-based modeling. So we're really happy to invest in our own capabilities, but really happy to invest in partnerships with some of the leading players globally. We do 26 different APIs where we capture an enormous amount of data, over 1 billion pieces of data that we bring in that supports our pricing. So I think the answer to that is very happily yes, yes, and yes. Anyone who's listening to this and thinking, gosh, could I partner with Tower, we'd welcome a call.
Nice, awesome. Well, there they are. Well, that's actually it on the questions, but that's great information. Really appreciate you taking the time to walk us through that. And yeah, thank you very much. So with that, on that note, we will wind it down for this edition of the investor webinar. And thanks to all the participants for joining us. If you do have questions you think of later, just let us know, and we will do our best to get them to you, as well as sending out the link. So thanks, Blair, thanks, Pushpay, and thanks, Mercury, and thank everyone else. Have a good day.